Hello everyone, myself Shashank, currently pursuing MBA in Sri Venkateshwara College of Engineering, which is affiliated to VTU. Today I am going to present a PPT on fundamental analysis. Introduction to fundamental analysis. Fundamental analysis is a method used to evaluate the intrinsic value of a security. It examines the various economic, financial, and other qualitative and quantitative factors. The goal is to determine whether the security is overvalued or undervalued in the market. Where it comes fundamental analysis of more company analysis, industry analysis, future profit outlook, macroeconomic conditions. Key principles of fundamental analysis. A primary principle is that stock's price should reflect its true value based on fundamentals. Analysts consider the financial statements, market trends, and economic indicators. Long-term investing in a typical the focus as a fundamental drive value over time. Fund, Let us analyze the difference between fundamental versus technical analysis. Fundamental analysis for long-term investment. Technical comes under a short-term investment. It is used for trading and investing, and it is only useful for trading to find out fair value of a security and to determine the correct time to enter the or exit the trade. Where fundamental comes use both past and present data. Technical use past data only, uses annual reports, news, economy, and statistics, and relies on a chart analysis only. Financial statements overview. Three main financial statements are the income statement, balance sheet, and cash flow statement. The income statement shows a company's profitability over a specific period. The balance sheet provides a snapshot of a company's assets, liabilities, and equity at a given time. Income statement analysis. Revenue, expenses, and net income are key components of income statement. Analysts assess profit margins to determine operational efficiency. Trends in revenue and expenses can indicate a future performance potential. Balance sheet. The balance sheet reveals a company's financial position at a specific date. Key ratios derived from a balance sheet include a current ratio and a debt to equity ratio. A strong balance sheet typically indicates a financial stability and a lower risk. Cash flow statement. Cash flow statement highlights the cash generated and used during a period. It includes operating, investing, and financing activities, providing insight into liquidity. Positive cash flow is essential for a company's sustainability and growth. Valuation techniques. Common valuation method include discounted cash flows, DCF, and price to earnings and PV ratios analysis. DCF estimates the company's value based on its expected future cash flows, and the price to earnings ratio helps to investors to compare a company's valuation related to its earning. Economic indicators. Fundamental analysis also considers macroeconomic indicators like GDP, unemployment rates, and inflation. These indicators can impact consumer spending and subsequently company performance. Analysts use this data to forecast industry trends and assess the market conditions. Industry and competitive analysis. Understanding the industry and competitive landscape is crucial for accurate analysis. Analysts evaluate a market share, competitive advantages, and potential threats. This information helps in assessing a company's position within its industry. Limitations of fundamental analysis. Fundamental analysis can be time consuming and may not be predict market movements accurately. It often relies on historical data when may not be reflect future conditions. Market sentiment and external factors can also influence stock prices in the short term. This presentation provides a comprehensive overview of fundamental analysis translates covering a principal methodology and limitations. Stock analysis comes under two different types for fundamental analysis and technical analysis. Key elements of fundamental analysis comes economic analysis studies overall economy and macroeconomic indicators like GDP growth, interest rates, and inflation and employment. Industry analysis examines the specific industry's outlook, market trends, and competition regulations and growth potentials. Company analysis focuses on financial statements, balance sheet, and income statement, cash flows, where key metric includes earnings per share, price to earning ratio, debt to equity ratio, return on equity, dividend yield. The purpose of fundamental analysis is to determine whether a stock is overvalued or undervalued compared to its current market price. Thank you.